Never before in our lifetimes have we seen a situation like this in the gold and silver markets. Never, ever before. We're going to talk about some crazy data today. The latest information we have about gold buying, silver buying from all around the world. And it's a setup that us gold and silver investors are going to like very, very well. But also, we've got crazy new news starting to circulate about a government stimulus program. We're going to dive into what the government's going to do that may affect your mortgage as we head into an election year. I'm sure it has nothing to do with the upcoming election, but there could be big, big changes in the residential real estate market and the mortgage market. And it all spells stimulus. It all spells money printing, which at the end of the day will be good for the gold and silver price. I appreciate you being here with me this morning. Please give this a thumbs up. You can subscribe to the channel. That's free. And Ron McAdams, thank you for the super chat. But let's get started by digging into some the latest and greatest information from our friends at the World Gold Council, I believe. Let's go up here. Make sure I've got that right. Yes, the World Gold Council. And yes, here we go. There's Pimbex and there's the World Gold Council. Gold demand trends. We just got the Q1 first quarter gold numbers, and I'm going to show you a couple crazy graphs, okay? But you've probably heard, basement dwellers, that the world central banks are buying a lot of gold. We know the reasons why, but this is turning into a massive positive setup for all the precious metals. Here, central bank net demand totaled 290 tons in Q1, the strongest start to any year on record.
You sound a little muffled.
I sound muffled? Okay, hold on.
Sorry.
That's okay. Hopefully that's better. The strongest start to any year on record. Suzie just informed me that the audio is not good, so hopefully you guys can hear me and I sound decent. The strongest start of any year on record. I won't say it again, but what does that tell us, right? Never before has so much gold been purchased by central banks in one quarter in the history of the universe. What is this telling us, guys? And I've got some more information that I'm going to talk about in regards to that is, here, I wrote this down. Where did I put it? What is so close to us often gets forgotten the quickest. The things that are the most obvious often get forgot the quickest. I'm going to check in with Suzie real quick and see if the audio's gotten any better. Suzie, breaker, is the audio any better? Okay. All right. I apologize, guys, for the audio. Hold on one second here. Let me make sure that we don't have anything. Hello. Okay. Hold on. Yep, we're good. All right. Strongest start on record. I'll say it one more time. Apologize for the technical difficulties. Here it is right here. Okay. Q1 2023, 286 tons. Q1 2024, 290 tons of gold. Okay. Central banks accelerating their gold purchases above 1,000 tons per year in 2022 and 2023. This is demand for gold. This will translate into demand for your silver as well. What is this telling us, right? We often forget the most obvious things. You ever go looking for your glasses and they're on your face already? This is kind of right in our face, blaringly obvious. Will this be a situation where 5 years from now, we're going to look back and say, oh my gosh, it was so obvious. I wish I'd bought more silver. I wish I'd bought more gold. I'm not giving financial advice. I'm just saying what could happen. This graph shows it all right here. Look, this is a Q1 is the blue bar on this graph for all these different years. Yes, 2024 on the right-hand side. Where's my cursor? Right here. As you can see, is the highest ever. Okay. And then the green is the rest of the year. What will this year turn out to be? Right? Will we have a record year altogether? All indications are a go. guys, and this will impact the price of silver as well. This marks the 17th consecutive monthly increase, helping to lift its report. This is China that they're talking about, helping to lift its reported gold holdings to 2,262 tons, 16% higher than at the end of October 22. The data indicates that this is the PBOC, right? The People's Bank of China, longest ever reported streak of monthly additions to its gold reserves. And we're going to talk about the BRICS gold currency as well. There is so much going on. And then we're going to talk about the stimulus program that may impact you at the end of the video. But we're going to talk about a BRICS potential gold currency. Nobody's talking about that anymore. All right. India grew their reserves. Here's all the countries that bought. Okay. Year to date, central bank net purchases and sales by country. Look at Turkey. Wow. China. Wow. India. Wow. Kazakhstan, Czech Republic. That's where Suzie's from. Oman, Singapore. Look at the big countries, though. Are these BRICS countries? Well, Turkey's not a BRICS country, but nonetheless, they're more of an Eastern country. China, India, BRICS, right? They're the IC in BRICS. So that's what we have going on right now in terms of big news. But again, in a little bit here, we're gonna get a one man's and a lot of people's opinion on this idea that we could be heading for a BRICS gold-backed currency. What about our friends at Citibank? Let's go talk. You want to hear about $3,000 gold? Where do you think silver will be when we get $3,000 gold? What do you think? $3,000 gold. I mean, that's when I see the silver price starting with the number 6, right? What do you think? Right? Maybe it could be 7. Maybe we could be in the 70s. Maybe it'll be in the 50s. But we know one thing for sure. Silver has so much catching up to do to the gold price already, right? We've talked about this, the gold to silver ratio. I haven't checked it lately, but I'm sure it's above 80 still, right? Maybe 85 range. Historically, that's been as low as it's been as low as 7 at times. But in recent history, right, I think the average that I hear is like 60, 50 range. If we had a gold to silver ratio right now, if we had a gold to silver ratio of 50 and the gold price is 3,000, which one of the biggest banks in the world is calling for $3,000 gold. But if we had that 50 to 1 gold to silver ratio, we'd have the silver price at $60. So call me crazy. That's easy math, right? World's biggest bank, $3,000 gold. Long-term average, we'll say 60 for the gold to silver ratio. That gives us $50 silver. That's darn near twice where we are right now. Can you imagine? Can you only imagine? Oh, it'll be a nice day, but imagine what the silver mining stocks will do at $50 silver. The miners would be generating like twice as much profit. And the cool thing about silver, guys, this is something that nobody talks about, but the coolest thing about silver is that nobody's been investing into silver mining. So when silver does go, when it does go to $50, $60, $70 per ounce, guess what? There's going to be a flurry, a rush of money coming into physical silver. Yeah, I'll show you some silver in a little bit. Don't you worry. But also into the mining stocks. And on top of that, here's the really good news for physical silver and the silver mining stocks. It's going to take a decade for the mining industry to catch up to the higher prices, okay? They can't just turn a knob and suddenly discover, develop, permit, build, and start pulling silver out of the ground. At minimum, it takes 10 years. We could be in for that's the 10-year bull run. Oh my gosh, it's all coming together for us now, right? We hear about that. From 2002 to 2012, we had a 10-year bull run in the precious metals. Why? Why? Because demand and price go up and the miners just can't. They say price fixes everything. It does, but it takes 10 years. Okay, so we could be in for a 10-year bull run in the price of the metals. I don't care. You don't have to agree with me. But I believe we're on the precipice of that. Not to mention with silver, right? The demand profile, and we're going to touch on that earlier. The supply demand dynamic right now, the deficit that exists right now, right, in that market, it's crazy. It's crazy. Okay. And I want to mention to our friend Neil from Neil Hahn's Dynasty, I give you my word, next week Neil put together a really cool informational short video about crystallized osmium. I will play it next week. I'm having audio issues. I thought I had it figured out. Anyway, we'll make that happen next week. Let's go to Citibank. Let's just quickly go check out our friend at Citibank. Okay, no gold sticker shock. This is the headline from our friends at Kitco, Michael McRae. No gold sticker shock. That means people aren't. Are you shocked? $2,300 gold. Oh, is that shocking to you? Right? I mean, maybe it should be. Right? Let's hop over right now. Let's go check on the update. Oh gosh, the gold price hasn't changed in 2 days. $2,300. Is that sticker shock? It's I don't know. We talked about it back in December. I'd predicted $2,600 gold by May. We got 100 thumbs up. Okay, thank you, Suzie. All right, no, we don't have sticker shock. All right, I'm shocked we're not at 2,600. Here we are in May, but we'll take the 2,300 because we had $1,900 gold. What about silver? 2,660 per ounce. Is that sticker shock? I don't think so. But while we're here, let's say thank you to channel sponsor Pimbex, Pimbex. I love to spell it. I love to say it. Pimbex, because I think Pimbex is best. If you're in the market for some gold, silver, maybe platinum group metals, do yourself a favor. I never will tell you what to do, but you'll benefit by throwing Pimbex into the mix if you're shopping online for any of the precious metals, because you want to work with a company you can trust, do your own due diligence. You want to get the best price, compare the prices, right? And you want to make sure that you're getting the top-notch customer service. For me, they check all the boxes. They did before I took them on as a sponsor, and it's been a real honor to have them as a sponsor. So thank you, Pimbex. And if you ever decide you want to convert all or some of an IRA into precious metals, you'll find that they can probably provide you, again, with more metal for your money. Let's go back to the no gold sticker shock city. How do you pronounce that when there's two A's? Akash Doshi on higher price precious metal prices and inelastic buyers. Very interesting. Okay, so let's just go down here. Okay, historically, the demand side of the ledger has been driven and led by jewelry demand. Consumption could be as high as 50 to 55% for gold jewelry. That started to shift over the last 10 or 15 years. I wonder why. Maybe that World Gold Council data that we just looked at, okay, it really started with the great financial crisis. So for 4 decades prior to the GFC and following the Nixon shock, central banks were net sellers of gold. They provided net supply to the market. After the great financial crisis, you saw central banks emerge as net buyers, okay? Central banks have been buying more gold. Yes, we know that already. Akash, central banks are now consuming over 1,000 tons per annum. This is supply being taken off the market. And from a mine production standpoint, we got to remember, guys, where this stuff comes from. That now represents up to almost 30% of annual mine production. Let's get down to the fun part. Do you see it? I see it. Hold on, I'm going to have a sip of coffee. In a research note, Doshi predicted that gold, this is Citibank, guys, this is one of the world's biggest investment banks, could reach $3,000 per ounce by 2025. Let me remind you, we are 1/3 of the way through 2024. 2025 is 8 short months away. $3,000 per ounce. He must be joining us here down in Ron's basement, right? Doshi attributes this potential surge to strong investor demand. Let's talk about that in a second, particularly in physical gold, evidenced by a significant increase in bar and coin sales since the onset of the pandemic. He also notes record level purchases by central banks. If I hear that one more time, I'm going to puke. but a good puke because we like that, particularly those in emerging markets, as a contributing factor to this upward trend. Yes, the emerging markets are buying record amounts of gold, Doshi. Us basement dwellers can inform you as to why, because they don't trust the United States any longer. But what he talks about is investor demand, strong investor demand. Yeah, sure, we're seeing strong investor demand in places like China, in India, but investor demand in the United States, right, the world's largest economy, is still quite low. What happens? I want to ask you this question. Think about this. The table is set. We have never before in our lifetimes, any of us, seen such a setup for the gold and silver price, right? It is so set up, supply, demand, all the dynamics. All of this has happened, guys, in an environment where there has been muted, limited, lower demand from the United States and Western Europe. What happens when the demand comes back in the Western countries, when people wake up? I haven't given you the speech lately, right? But I hate to tell you this, basement dwellers. We are lone wolves in the United States. We are rebels, right? We are the black sheep. We are the 1 in 100, the few, the proud, the basement dwellers, the silver stackers, the gold bugs, whatever you want to refer to yourself as. The people of, we'd like to think, a little superior intellectual abilities, the ones who can see the forest through the trees, right? We're ahead of the curve. We're looking around the corner, and then we're looking around the next corner. We're seeing into the future. We're scared. We know, you know how to work a calculator, right? Look, you probably are one of those people, right? You may be early. Sometimes being early feels wrong, right? But I don't think we're wrong, because right now when we're 1 in 100, when 2 or 3 of your neighbors decide to join us, right? When America really starts to wake up, when the dollar continues its slide in real value, right? And those people that are like, well, you know, whatever. I'm not poking fun at anybody. Good for them. They're living in oblivion. When the people in oblivion are forced to wake up, and we get increased investor demand in the West, in the United States, the wealthiest country in the world, supposedly, we will see an influx of money into the silver and gold market that will knock your socks off. Okay, and I'm going to knock your socks off with a few more things. Wait till you hear about the stimulus program. You're about to get stimulated. How do you like that? I'm going to stimulate you about stimulation a little bit later in this video. Are the BRICS countries, are they or aren't they? I don't know. Are the BRICS countries starting a gold-backed currency? I'm hearing rumblings about this. I'm hearing people talk about a May 14th meeting between the Russian, what's his name? I'll get it for you here in a second. Their finance guy, whatever, in China. The Russians are heading up the BRICS this year. Are we going to hear about some form of a gold-backed currency? Gold's already backing the world. We know that. We know from seeing the extras pyramid. I may just pull that up for you here in a little while, because that upside down pyramid always makes us smile. But let's go see what the BRICS are doing right now. This comes from our friend John over at the Pickaxe, right? Always putting out great information. The G brick, which stands for the gold brick. Okay. Thank you, Craig, for the super chat. Super chat. Okay, we'll pull it up here in a second. The G brick, they're calling this now. The gold brick. Unfurled. Gold-backed currency. The US dollar as global reserve currency. Crushed to smithereens. Wow, that is a great, powerful headline. Uncle Sam outfoxed, outmatched, and most likely out of gold soon. Warning! Neocons will double down on the only thing backing the US dollar, war. Seems like they kind of already did that. But let's look at what this guy Clive Dunn had to say. He's talking about, okay, this is the finance minister. Glasgow's new gold brick, gold-backed settlement currency has been beta tested and is ready for debate. Okay, not that it's being rolled out. Debate at the forthcoming May 14th through 19th meeting, chaired by Vladimir Putin, who I probably pronounced that wrong, but nonetheless, Clive Dunn says the recent surge. This makes sense. The recent surge of gold price by $175 was from China and Russia buying physical for this beta test. Washington has been caught short by the size, speed, and size of this threat to the hegemony of the U.S. dollar. Boy, I'm slaughtering everything today. Yellen and Blinken. Okay, remember they recently we sent Yellen, Janet Yellen and Blinken over to warn the Chinese. Right, we're warning them. Oh, you're helping Russia, and now you're against us. Right. Okay, we're not about supplying munitions to Russia. He says it's a cover story. They were an effort to stop this threat to the U.S. dollar as the global reserve currency. They are scrambling. Blinker and Western analysts are confused about how the gold price can go up while U.S. Treasury yields are rising and gold is exiting ETFs. Yes, everything in the West, right? We've got gold coming out of the ETFs. Everybody's baffled. Why? And I'll tell you why, guys. This is critical to understand. This is a big deal going on right now. Hold on here. Craig Edmonds, good to see you, my friend. Thank you for the super chat. This is the biggest deal going. Everybody's baffled. Interest rates are up. Interest rates are up. The dollar's up. Okay, gold should be down. We talked about this yesterday. If you had told any analyst 2 years ago, 3 years ago, where interest rates would be up, right? You've heard it ad nauseum. The dollar would be. They would say that gold, right? Gold should be at like $1,400, $1,200 per ounce. Silver, $16, $15, but it's not. How could it be? It's real simple, guys. Real simple. All right. Everybody is swapping. Not the United States, but all the foreign countries like China, Japan, who else? Russia sold all of them. Everybody is selling their treasuries and buying gold. So the price of treasuries goes down, which makes interest rates go up, right? And they're getting that money and they're converting their paper fiat unicorn fart dust money. What are they buying with it? We know ad nauseum. We've heard it 6 times in this live stream already. Central banks are buying gold. That's what's going on. And now we got this report that quite possibly, right, there's this May 14th meeting. I tried to look it up, but there's not a lot of, information out there about what's going on with the BRICS. I think maybe they don't want us to know what's going on. I don't know. Possibly. Who knows? But there's supposedly this meeting. There's supposedly a debate that's going to go on about a new settlement currency that could be backed somewhat with gold. We don't know, right? This is all, but that's the way things work in the world. And there are people, right, that are digging into, let's say, Russian media reports and parsing things together, like Andy Schectman says, right? Pulling the crumbs together and trying to develop a thesis about what's going on. Let's just make sure we didn't miss anything from our friend Clive. Clive Dunn, okay? African central banks are all repatriating their gold. Why? Because they know what is coming, the G-BRIC. They are worried that Washington will refuse to return their gold, like when Nixon closed the gold window in 1971 due to France asking for all their gold back. He says when. I'm going to say if. All right, that's because there's a lot of I don't want to say suspicion, speculation embedded in this. Let's put it that way. When the gold brick is launched, the pricing, this is where it gets crazy. The pricing of half the world's oil. Oil is the lifeblood. This is another critical point. I'm going to come back so I can look you in the eye, basement dwellers. Oil is the lifeblood of the world economy. The oil market is multiple times bigger than any other market out there. I think at one point I did some research and we saw that, let's pull up our banner. I need to fix, there's a spelling error in there. I know that, I will fix it. But the oil market's like, I think it's like 10 times bigger than the gold market. Oil is everything. Oil is massive. It is literally the lifeblood of the world economy. The petrodollar, we won't get into that, but since 1974, I think it is, when Kissinger went over to Saudi Arabia, all the oil in the world, basically all of it, most of it, was traded in dollars. It allowed us to to borrow into infinity because all these countries had all these dollars from selling their oil, so they would buy treasuries. That's going bye-bye, bye-bye, okay? It's a big deal. So let's get back to this article one more time. And let's see, right? All the oil, half the world's oil can change overnight. It will become much cheaper to buy oil with gold. The US dollar price of oil could go to $200 to $300 per barrel. All right, here we go, guys. We are back. We are back. It's just absolutely crazy. What's going to happen tonight? That's the big question. I think tonight could be one of the craziest nights ever for the gold and silver price. If all this is true, all these things coming together, like I don't have a crystal ball, I'm just telling you it could. Tonight I will be watching I usually don't really watch the gold and silver price a lot on Sunday nights, but tonight's going to be very interesting because guess who's coming back? Santa Claus is coming to town. Huh? The Shanghai Gold Exchange, the Shanghai Futures Exchange have been down for the last, 5 or 6 days. They're coming back. And I want to show you a picture of what happened last time. The Chinese came back after a holiday. They are taking over the gold and silver price. They're in the process, right? There's different people have different opinions, but the Chinese are taking over the metals markets. At minimum, we can say they're exerting significantly more influence upon the silver and gold market. What do you think? Right? Do you think, and we have to think about this, right? Do you think if the Chinese and the Russians and the BRICS countries, but especially the Chinese, well, we forget about India. India too are taking over silver and gold. I got a question for you. Do you think they'd be telling you all about it on the Western mainstream media? Do you think tomorrow you're going to turn on the Children's News Network, CNN, or MSNBS, I'll use a nice way to talk about them, or Fox News, and they're going to say, oh, guess what, America? The Chinese have taken over the gold market, the most important monetary asset in the world, the silver market, the Shanghai Gold Exchange and the Shanghai Futures Exchange, right? Right? Silver's priced like $3 an ounce more in Shanghai. I wonder why. All right, so tonight they come back from holiday. Who knows what'll happen, but I want to show you quick picture of what happened last time. Hold on here. Last time the Chinese came back from holiday. Yes, okay. I can't read that up there because my thing's covering it, but there were 800,000 people at one mall lined up to buy gold, okay? I mean, is this crazy or what? I got another picture. Can you see me in there? I'm looking. I'm waving. I'm in the upper right-hand corner. No, I was not there. There, lines of people. These are actual pictures of people actually lined up at Chinese malls to buy gold. Okay, that's what's going on right now in the world. All right. Okay. Soon, the world will be short of gold and silver. Look, the title of this video and the thumbnail were about, we've never been in this situation before. The world, I mean, think about gold. Everybody's buying all the gold. Think about silver. Everybody's buying all the silver. Think about what the Silver Institute told us. And people are suspicious that the Silver Institute numbers are skewed to the downside. But even under the worst of situations for a silver investor, we know there's going to be an almost 200 million ounce deficit this year. What we need to remember, okay? What we need to remember, this is a fundamental. What was that I said to you earlier? What is so close? Oh, Susie scared me. Okay. What is so close often gets forgotten. What is so obvious, and it's so obvious right now, the supply-demand picture in the silver and gold market. I will ring the cowbell in just 1 second, okay? There's only so much silver and gold on the planet. Only so much. It's finite, all right? The world is mining. Think about this in terms of I got the big, let me ring the cowbell. And one more for Jake. Okay, that says thank you guys for being here. It is a big deal when you join me here in the basement, so thank you for being here on a Sunday morning. Thank you. I think Jake's probably not here, but Jake, we rang it for you anyway. The world is mining as much. Look, there's only so much gold and silver in the world. The world is mining. The mining companies will mine every last ounce they can. They are right now, okay? And there's not enough to go around. There's not enough gold. There's not enough silver. Think real obvious, right? But we forget the obvious stuff right in front of our face. I understand we all do it. You're not alone, basement dweller, right? Right? Okay. They're mining all the silver and gold that they possibly can. There's only one thing that fixes that situation. This is as fundamental as gravity. It's as fundamental as you need to eat food every day to stay alive, right? There's only one thing that fixes the fact that the world is demanding more and more silver and gold than the miners can provide. One thing. Can you guess what it is? It starts with P. Price. Price fixes everything. And while we don't really want to measure our gold and silver in terms of price, but if we are, as a benchmark, going to look at what the quote unquote price is based on unicorn fart dust paper US dollars, or maybe you're in Europe, euros, maybe you're in Australia, whatever, Australian dollars, maybe you're in Japan. What's that called? The yen. Doesn't matter. One thing, I mean, the demand for gold in Japan is crazy. It's crazy, guys. There's only one thing. Price, right? Because if the price goes up, when gold goes to 4,000 per ounce, when silver goes to $40, $50 per ounce, guess what? Then those mining companies can look at some of their lower grade reserves, okay, and say, well, we can start to mine that. But remember the critical and exciting thing about all of this. And we're going to talk about how you're going to get stimulated here in a few minutes. Don't you worry. Bunch of BS. We're going to call BS on that. But nonetheless, right? That's the only thing that fixes it is a higher price. And the bonus kicker, the moment you've been waiting for, even when that price gets higher, and the mining companies say, oh, well, we can start to mine this other ore that we kind of forgot about because it wasn't profitable, but it was lower grade ore, right? It takes years, at minimum, years, even if they have it and they know it's there. Or it could take decades, right? We know there's a silver deposit over there. It was never made sense for us to mine it before, or to drill it, or to permit it, or to build a mine. It takes years, okay? We could be in, I know I repeated this, I'll say it one more time. We could be in for a 5, 6, 8, 10, 12, 20. What the heck? Let's just ride it out. I'm 54. Let's do about a 30 year. I'll be down here at 84 saying, hey guys, I think the bull market's over. Wouldn't that be fun? Yeah, the silver price is 16,000, whatever. We don't even have dollars, whatever they're calling the digital dollar at that point. I don't know. That's just the fact, okay? And the why? Oh, let's talk about manipulation. Do you think the price of silver and gold are manipulated? What would happen if the price of silver was artificially tamped down? We've never heard that before from somebody from one of the big exchanges. Oh, we tamped down. That's exactly what they said after the silver squeeze. We tamped it down. Man, we tamped it. But no, the silver price is not manipulated. You're a tinfoil hat conspiracy theorist is what you are. If you believe that the price of silver, well, let's just take a look. This is so much fun. Hold on. Let's take a look. We're going to look at this one more time. This came from our friend Eric Young. Evidence that the London, the OBMI, and the COMEX markets are designed to introduce extreme volatility. That would be manipulation. That would be tamping down to the gold prices and silver prices. Eric, you forgot that. As to discourage citizens from physical gold ownership. London wholesale gold dealers' views on U.S. gold and silver sale, right? And private U.S. ownership. So this came from the United Kingdom, London, England. I've never been there. This is marked as declassified, so we can read it now. Released the U.S. Department of State, whatever, in June of 2005, and it was to the Department of State, Secretary of State. Hold on, Buttercup, because this is where it gets, this is where your blood boils. The red lines, and we're going to get to the red lines. Impact of private, that would be you and me, U.S. ownership according limited official use, page 2, blah, 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 to the dealer's expectations. These are the dealers. These are the manipulators, we'll call them. We'll be nice. Will be the formation of a sizable gold futures market. That's how they manipulate the price of silver and gold, through the paper unicorn fart dust, highly leveraged futures markets, the LBMA and the COMEX. Each and every one of the dealers expressed the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. What they're saying is the futures market could be leveraged. We hear numbers like 200 to 1, 400 to 1, whatever it is. That's what that sentence means, right? And that the physical, the actual physical, we hear that all the time, the actual registered inventory at the COMEX and the LBMA is minuscule compared to all the paper unicorn fart dust, right? Leveraged contracts. Get ready for your blood to boil. Take a deep breath. Also expressed, this is by the dealers, this is by the COMEX and the LBMA guys, was the expectation that large volume futures dealings would create a highly volatile market, meaning it will have wild swings in price. In turn, the volatile price movements would diminish the initial demand for physical holding. That means people would say, I'm not going to buy gold, I'm not going to buy silver, it's too crazy price movements, it's insane, blah, blah, blah. And most likely negate long-term hoarding. Long-term hoarding? Are they talking to you? Are you a hoarder of silver and gold? By U.S. citizens. There it is in black and white. Yes, the market is manipulated. No doubt about it. Okay? It is manipulated. But what about the good old days? Let's just go back. I added a new slide to this. This is my friend Gary sent me this really awesome, really awesome little package, right? With this thing. Okay, let's talk about the good old days real quickly. When the United States dollar was based on silver, and I took a new picture because I keep saying this to you guys. I'll just read what Gary said one more time. Silver certificates. That's not a dollar. Let's go back here. Well, it's a dollar, but see at the top, it says silver certificate. And I'm going to let you read what it says in a second. Silver certificates were a type of representative money issued between 1878 and 1964 in the United States of America. One could take their silver certificate to any bank in the United States and exchange the certificate for silver coins, including silver dollars. Note at the bottom of the certificate that states in silver payable to the bearer. So there is the top of that. Okay, see it? It says right there. Pull a dollar out of your wallet now. It doesn't say that anymore. Silver certificate. It says this certifies that there is on deposit in the Treasury of the United States of America $1. Oh, those little stinkers. They had this other little sentence down there. On deposit, $1 in silver, payable to the bearer on demand. Woof. Those were the good old days, right? Those were the days when we didn't have runaway inflation. Those were the days when we didn't have insanity. Let's talk about being stimulated, okay? But first, I want to say thank you to the channel sponsor, First Mining Gold. If you like to invest in precious metal mining stocks, check out First Mining Gold. They have 2 multi-million-ounce gold development projects in Canada, 1 in Quebec, 1 in Ontario, and they have 4 other projects, all in Canada, all development stage, advanced exploration stage projects. You can learn more about them at firstmininggold.com, or you can reach out to Paul Morris, a real live human with a British accent. I'll put a link to his email address. He works for the company. He's happy to answer any questions. And of course, our friends at Fortuna Silver, who on Tuesday will announce their earnings. It's, I think, going to be very interesting. These higher metals prices, right, that we had during the first quarter and we've really had during the second quarter. I think it's going to be interesting to see just how much cash flow in particular Fortuna generated. We know they're buying back stock. We know that they're paying off massive amounts of debt, and they already had low debt to begin with. So we'll see what Fortuna has to say on Tuesday. Let's talk about being stimulated. Are you ready for the late? This is crazy, and this is kind of breaking news right now. And I think this is part of the election year shenanigans. And this is basically, I'll be interested to hear how you think this is going to play out. But to me, this is basically going to require more money printing, more dilution of the dollar, which we know in the end will be very, very positive for the price of gold and silver. But this has to do about more, I will call it, not say mortgage bailout, but consumer bailout. Okay. The economy is in big, big trouble in the United States. I think in the next 6 months, we are careening towards a massive recession. Again, the Fed's going to do the only thing they know how to do. Print, right? Right? Dilute the dollar. The real value of silver and gold will benefit. But this latest thing is stimulus for the government is going to basically, I'm going to read this to you, subsidize the home equity line of credit business, the HELOC. We're going to call it HELOC, home equity. So Freddie Mac, this is what we're hearing, is looking at securitizing second mortgages. Again, a second mortgage is a home equity line of credit, a HELOC, okay? Why would they be doing that, right? Why would they be doing that? Think about this. This is interesting, okay? We got a lot of people in this country. Number one, the economy's in trouble. Number two, it's an election year, okay? The economy is, boo, Red Lobster's going to close, maybe. Claim bankruptcy. Good riddance. I'm over Red Lobster. But it's all seriousness. I dropped my daughters off at my mom and dad's house yesterday, Highway K in O'Fallon, Missouri. This Jeep dealer. It's like, yep, thank you, Suzie. Hold on a second, guys. There we go. Okay, Jeep dealer. Unbelievable amount of cars. They're parking the Jeeps in the grass. Okay, a year ago there were no cars on this lot. Now, I mean, the economy, the car business, residential real estate. Woo! Everything's circling the drain right now. Okay, it's an election year. People are. Just bear with me here. I'm not talking about you. I hope I'm not talking about people have maxed out their credit cards. People can't afford to go to Red Lobster anymore, right? So what's the government going to do? They're going to stimulate us. They're going to stimulate a big part of the economy because think about this. Think about this. There's all these people that bought a house 3 years, 5 years, 6 years, 2 years ago. And we've got this little bubble right now in the residential real estate market. So you bought a house 4 years ago. Let's say you paid $300,000 for it. Whatever you paid. We'll just use this as an example. And you have a 3% mortgage. You're trapped, right? Welcome to America. You're trapped in your house. Because if you want to move now, the new house your house might be worth a lot more, and that's going to play into this. Stay with me, okay? The house you paid $300,000 for is now worth $500,000, and you want to move to a house that cost $700,000. For it's a little bit bigger, maybe another extra bedroom, whatever, a basement. But you go out and look and you're like, I got to get a higher mortgage balance, right? Because you're buying a house now that's worth 200, and I got to pay an interest rate that's more than twice as high. My payment goes up 3-4 times. Oh, I'm stuck. You're trapped. Okay. So you got all these Americans who paid $300,000 for a house 3 years ago. It's now worth $500,000. Well, that guy that paid $300,000 for that house has racked up his credit card, has taken out, got car loans, got is in debt. Americans, welcome to America, right? And we're a consumer-based economy. So they're in big, big trouble, right? the government wants to incentivize, don't fall for this, is my opinion. Incentivize people, right, to take out a second mortgage on their house. No, you can't move, but you've got 200,000 in equity in your house. You paid 300 3 years ago. Get this nice little 4%, 3% mortgage, but now your house is worth 200,000 more. Hey, I got an idea for you, bucko. Why don't you take out a HELOC, a home equity line of credit? Right? You can reduce your monthly payment instead of paying all these high payments on credit cards and your 15-year car loan you took out to buy an F-150 in the vacation that you paid and the buy now pay later that you're getting ripped off on. Why don't we consolidate it all into one nice little monthly payment? And people, look, don't fall for it. People fall for it. They only look at the monthly payment like, oh, sure, I'll take out a $150K home equity line of credit. I'll pay off my truck payment. I'll pay off this. And now it's got one nice little neat little payment that I'm stuck with for the next 30 years or 20 years, however long they do it. What they're trying to do is get people more in debt, take out debt against that extra equity in their house to pay off all this other consumer debt. Why? Because then they're going to be like, woohoo! Hey, guess what, honey? Our credit card balance is zero now, right? Let's go buy a new truck. You want to go buy a new truck, right? Okay, that's what they're trying. And then what happens if the real estate market goes down the tubes? Well, guess what? Your house is worth 350, not 500 anymore, 350,000. But you still owe all that money. So it's a big shenanigan. It's a big, big attempt by the government in an election year to stimulate the economy. And where's the money? So they're talking about who was it? Freddie Mac actually buying out, securitizing it, meaning the bank gives you the home equity line of credit, right? You borrow the money from the bank, but then the bank, instead of having to sit on it themselves, right? Remember mortgage-backed securities? The same kind of concept. Then Freddie Mac or Freddie, I don't know, I'm not a Freddie guru. Freddie Mac, right, will buy those from the bank. So the bank's like saying, well, yeah, they'll make a couple thousand off each one. Don't fall for it, guys. Don't fall for it. That's my opinion. I'm not giving financial advice, but that's what we're going to be hearing about apparently here in the next 4 to 6 weeks, because it's Bidenomics. It's working. It's debt. And debt is one thing. Debt is slavery. Okay. I hate to use that word lightly, and I'm not using it lightly. Debt is the currency of slavery. What is it? Silver is the currency of gentlemen, and gold is the currency of the royalty. I don't care. To me, silver and gold are the same thing, right? This is real money, the real McCoy. You can use it. It stores value. It protects you against inflation. If you're in debt, debt is the opposite. Okay, unless you're taking on debt to start a business and you think you're going to generate more income than that debt is going to cost you, debt is never a good idea. Think about the people in this country that have racked up their mortgages.
300 likes.
Okay, Suzie, we have breaking news from Suzie. We almost have 300 thumbs up. Let's do it on Sunday morning. And guys, we will ring the gong when we get to the 300 thumbs up. Okay, absolutely, absolutely. But it's so critical to understand, right? I mean, some debt is okay. If you've got a, in my opinion, I'm not giving financial advice, but I kind of am. If you've got a mortgage at 3%, that's a pretty good deal, right? Because you can actually invest that money into a money market account right now and make 5%, so you'll beat it. But generally speaking, especially when it comes to a flexible rate like credit card debt, car debt, I mean, the value of cars is going down, right? If you've got a big debt on a car and you're paying interest, just be careful, right? Yeah. Hello? We got 300 thumbs up. Okay, thank you, Suzie. Let's ring the gong. And then you guys have been asking me for more product reviews. I can't hear you. The batteries. Hold on a second. Suzie, the battery's dead. Yell. I can't hear you, sweetie. Yell. Okay. Anyway, I'm going to ring the gong. Oh, here we go. 300 thumbs up. Thank you guys for being here. There we have it. Thanks for being part of Ron's Basement. Okay, please check out our sponsors, Pimbex, pimbex.com, P-I-M-B-E-X, First Mining Gold, and Fortuna Silver. Have a great Sunday. You are the most important part of Ron's Basement. This is not possible without you. I tried to get them to change it to RonTube. They just aren't interested. It's YouTube, okay? Be good to yourself. Be good to those around you that you love, and I'll look forward to seeing you soon.